Good morning, friends. Dan here, and I want to give you a quick update on the stock market, the economy, inflation, interest rates, GDP, all kinds of important things. This is directly going to correlate to where I think, personally, the stock market and crypto markets are going to go. I'm also going to give you a real estate update as well. I'm going to try to do this once a week to give you an informative update on where I think that the stock markets, crypto markets, and real estate markets are going to go. This is not financial advice, guys. This is just my opinion and analysis. But there's some big catalysts that are actually coming up this week that are going to make actually this month, that are going to make a huge difference. And depending what these numbers report at. So first of all, today, job numbers reported high. But if you look, the job numbers are primarily increasing in education and healthcare. That's the two different sectors. A lot of those are massively government subsidized. Again, so, and another interesting that I saw is like Pfizer is raising the cost of the jab, cost of goods by 50%, which is kind of interesting. And now that you're seeing that's become, almost like a normal inoculation thing as far as the government goes, now they can raise their cost of goods 50% because it's contracted in, right? That's kind of interesting. So it'll be interesting to see what some of the stock does of some of the manufacturers of the jabs. So that's, I think, just interesting observation. But the couple important things that are coming up. The GDP numbers, gross domestic product numbers, are going to be released this month, and that's going to be important. If the GDP drops significantly, then that's going to cause some more fear, and that could cause some more correction. If whammy number 2 hits, if inflation is still increasing, we're probably going to see even more adjustment. Now, I believe right now we took a little micro rally. If you notice, crypto and the stock market have been mirroring themselves. If you chart the NASDAQ index with, let's say, Bitcoin, you're going to see a kind of amazing correlation. When the stock market goes up, crypto goes up, and the stock market goes down. Crypto is sitting actually at right around $1 trillion market cap right now, which is small. If you think about it, it's actually smaller than Amazon, smaller than Apple, smaller than Google. So the whole crypto market is actually almost a consolidated version of a small stock position. But that's why you see a lot of volatility, now we've taken an interesting run up. I think the bottom we saw was about 17,000, high 17s for crypto, for Bitcoin, and Ethereum touched actually in the upper 8s for a moment there. One of my friends bought a lot, $300 million worth of Ethereum. I think it was about 878 was his price that he got. So he's done pretty well, man. Maybe he takes a little bit of profit. Maybe he goes long, but we'll see what happens. Our fund, our crypto hedge fund, Ugly Unicorn, we've done extremely well. We have far outpaced the broad market as far as performance-wise, and we will have our third-party audited numbers here by probably around the 15th to report out to our investors. And I'm going to talk to Compliance Bridger, my partner, and see if maybe we can share those numbers with you here. But what I do know is it's kind of interesting. There is a lot of confidence coming in that maybe we've reached some sort of bottom. But I don't believe we've reached a major bottom. I think it's a little bit of a dead cat bounce. Remember I talked about how a big correction happens and then it takes a little bit of a bounce up and everyone gets ultra courageous and then another drop. And let me give you the information of why I believe that's true. You guys saw that Three Arrows Capital, default. It was a giant fund and they had billions of dollars and they defaulted. And then you also saw a lot of the companies that were lending them money, like Voyager Online Exchange, they blew up, and that was kind of interesting. And Celsius had some problems, but Celsius ended up getting possible backing from some other sources of funding. So it'll be interesting to see. But those are all really tiny tiny projects in the grand scheme of things. And the cool thing about it is this, I think what they're learning is this, and I think the whole crypto market is learning, being leveraged, and I've talked about this with real estate and with stocks over the last, 25 years, is being over leveraged is the biggest mistake anybody can make in any industry. Really. It was really interesting. If you listen to my podcast, click my link and listen to the podcast with Jeff Flam. Jeff Flam is one of my mentors, phenomenal guy. He's building some very large developments, but he, out of anyone I know, at one point in time owned more commercial real estate than anyone in the state of Utah. And I've actually known him for almost 3 decades. And Jeff's like, man, I don't like to be leveraged too heavy. I like to have, as far as like my property goes, not more than 50% of it in debt. And that's actually very conservative because, you can get into a lot of properties with SBA loans, even commercial stuff for like 10% down. So it's pretty cool to see the theory of people that have been rich for decades and not flash in the pan guys. Now, one thing that you have seen during this economic adjustment is on social media, a lot of the people that were coming off as gurus in real estate or business or whatever it is, they're gone now. They're not posting as much now because they were over leveraged and they got capital called and lost whatever investments that they had. But the good news is actually, it's sad that that happens, but it really teaches people in the more current times, though, that being over leveraged is dangerous, right? Now, I've talked to you guys about talking to your banks about home equity lines of credit, also known as the HELOC. That's where, for example, if you've got, equity in your home, let's say you got a couple $100,000 in equity in your home, you can actually borrow against that equity through your bank. Now, it's a variable credit line, so as interest rates go up, and to give you an example, mine was like at 2.6%. It's now 3.8%. And I don't actually use it that much unless I use it as dry powder. So if there's a ripping deal on requiring a business, property, anything like that, then I can use that. I don't use that line for crypto or stocks. Very important. I use it for cash flowing real estate. That's really important though. And to follow what, Jeff taught me 30 years ago. Again, not used to be over leveraged. Debt is debt. So when you're borrowing against that, that is debt. Now, what a lot of you guys can do is if you establish this line of credit, it's used as an emergency buffer. So if you get laid off, there are going to be a lot more job layoffs, I believe, in the coming times. It's used to survive while you transition to either start another business or get another job. Very critical to have that credit line in place. I think it's critical. Now, also, you can get a CELOC, which is a commercial equity line of credit on some real estate properties. A lot of times, just for example, I've got a lot of property that's just completely paid off and I just cash flow from it, had it for a while. For example, I've got 10 units in North Salt Lake and most of them are paid off. But I'm talking to the bank about it to establish a credit line for those as a block, right, of real estate investment. But again, I'm not going to get over 50% leverage on those. But, you want to follow your thesis, okay? So the big catalyst of what's going to happen, guys, is there's going to be, I believe, some big explosions in the market and collapses when it comes to crypto exchanges and things like that. If you guys remember back to 2008, 9, and some of those in year 2000 and some of these other adjustments, you've been around that long, you remember Lehman Brothers just, went belly up, and a bunch of huge institutions went belly up. Bear Stearns and a few others, I think. Don't quote me on those, but that's what I remember. A bunch of them went up. That's what caused the major drop. So if we're looking at about a 25% drop in the S&P right now, I think the major pain threshold point is when you approach 50% range. If you start hitting that range, though, then you're probably starting to feel like the worst of it, hopefully, and that means that we're probably 50% down to what it could be dropping. So that's kind of interesting to see. Now, the crypto markets are just an amplified version of that. Okay, so think about it as a smaller cap stock, right? They're going to drop. Crypto as a broad market would drop harder, and that's why what we're doing for our fund is doing liquidity pairs, yield farming, things like that in safer positions. Now, that does reduce some of your returns, but what I'm also doing is dollar cost averaging into some positions of smaller cap tokens that I believe have a huge utility upside, an actual functional upside. So kind of interesting to see where it's going. But what I've always told you, the best thing you can do is just really double your efforts at your job, at running your business, whatever you're doing, and increase that cash flow and try to lower some of these extraneous expenses. I know a lot of people are going on these extravagant vacations right now. And I mean, really, there's two types of things. There's a durable and a non-durable good. A durable good is something, that you buy and, you can use for a while and those kind of things. A vacation is totally a non-durable good. And, but it's an experience, and experiences are important though. But one thing I found is living in Utah here, now I do travel sometimes, but I don't travel that much, maybe like once a year to, go on a vacation somewhere. But here in Utah, it's such a beautiful thing. So instead of like YOLOing to Hawaii or something like that and taking a whole family and dropping 10, 20, 30 grand or whatever you got to do depending where you're staying and how you're flying, gosh, just take your family out to go hiking, go walk the dog, go meet friends here, have a barbecue. It's a lot cheaper to do that than it is to blow that extra money, because your money right now is worth 50% more. So what I'm saying is, if you drop 20 grand or 10 grand on a vacation, because right now of inflation and those kind of things, and the market being down so much, when you spend 10 grand, that's actually worth 50% more. There is an inverse to that too. Any dollar you earn is actually worth 50% more. I want you to bake that in psychologically. So if you can make an extra 1,000, 2,000, 10,000, million a month, that's actually worth 50% more. All right, I want you guys to do a little bit of homework for me today. Also, people are asking me like crazy in the comments, how do I get into your Ugly Unicorn Crypto Hedge Fund? We take deployments, meaning people can put money in, to accredited investors, meaning you have $1 million net worth or more, and there's other qualifications for that, but accredited investors with a minimum entry of $500,000 if you want to get into our hedge fund. Just direct message me. We have to AML check you. We have to verify you're accredited. But the cool thing is, when we throw our private events, you get a free ticket into there if you are an investor. And normally it's 30 grand to come to our private get-togethers and it's cool because we have like CEOs of token ecosystems and billionaires and all kinds of crazy people that are on social media that you can actually meet in person and establish a relationship with. So it's pretty cool. But if you are an investor with us, there's no fee to come to those events. Okay, so just direct message me if you're interested, and I'll send you a link. You can register for our next call and walk through, and you can deploy next quarter. Okay. All right, here's your homework though. I want you to get really clear on your financial, your physical, and your spiritual goals. I want you to write them down. I want you to be very clear on what outcomes that you want to see this year and then going into next year. And you can even be, extra overachiever and set like a 5-year goal and a 10-year goal and a 20-year goal and a 30-year goal. You can do all those categories. But here's the important part. A lot of people write down, they go beyond manifestation into actually writing down what they want, because when it's written, it's real. But I want you to write action items. What do you need to do to achieve those things? Okay, so if you set a physical goal, my goal right now is to lose like 20 more pounds. I'm really going to lean out. And my action is move an hour a day, whether that's weights and also walking and hiking and those kind of things. But also I'm going to be doing intermittent fasting every single day for 2 weeks. That'll probably peel me off, 10 pounds or something in a couple weeks, maybe 20 pounds in a month or two. I've done it before. You guys know I was 230 pounds and dropped to like 180. Took me like 2 years, but I did it. write down and be very clear on those actions. Okay. Now, the third step is to take those actions and actually schedule them in your phone so they become a reality. Okay. That's your homework. Now, the second piece of your homework, please share this video so we can help more people. There's a lot of people that don't know what to do, and everyone's direct messaging me similar stuff. I want to help those people. You probably want to help those people. And the good news is when you help people, it comes back to you. The big man above sees that. Karma sees that. It's a big thing. All right, you guys, you know, the grind includes Friday. So today is not a day to check out and just YOLO early over the weekend or whatever. Today's a day to execute. So get the stuff done. Share this video. Let's rock and roll. Thanks.